If you ask me whether I think the government is corrupt and sneaky enough to have that as part of their plan, sure, they would totally do that if they thought they could get away with it. And they might have people who believe that they can get away with it. So it could be that Bitcoin is the loss leader, or the marijuana in this process that leads to CBDC heroin or something like that. I don't know.
You're watching Capitalism. My name is Danny, and today's guest is John Rubino. John, thank you so much for coming back on.
Hey, Danny, good to talk to you again.
Yeah, for sure. Let's just dive right in, John. What is top of mind for you? What is occupying your headspace?
All right, the biggest thing that we got to worry about right now is World War III. Which has been the thing we've needed to worry about for the last few years. We've been blundering into shooting wars all over the world, and most of them are, to put it bluntly, they're America's fault. We're not innocent victims or collateral damage here. We're basically the driving force for a lot of this stuff. And on the way out, Joe Biden just gave permission to Ukraine to use American-made weapons to strike deep into Russia. And Putin is saying, well, that's a nuclear red line if you do that, and he's been saying stuff like that all along. And he's been kind of true to his word. He said, if you induct Ukraine into NATO, that's the red line for us. And that turned out to be true. That war got started in large part because of NATO encroachment. Anyhow, I'm going to antagonize a lot of people by saying this. So let me veer off and say, if that doesn't happen, then we have lots of other things to think about, some of them good, some of them bad. And so let's assume for a minute that we get through the next 3 or 4 months without a shooting war with a nuclear power breaking out. And then we've got some really interesting things going on because Trump has brought in a really interesting team. It's fun to watch. It was always fun to watch Vivek Ramaswamy and Tulsi Gabbard and RFK Jr. and everybody on the campaign, on the presidential campaign, working for Trump out there. And now he's putting them into government. So we're seeing a very interesting experiment now where a quasi-populist comes into power and then starts naming other populists to various parts of the government, where RFK Jr. says he's going to fire the top 400 scientists at the not the CDC, the FDA. So stuff like that is on the verge of happening if Trump's picks get okayed by the Senate, and I think most of them will. There are a couple that might not, but most will just sail right through.
And
probably.
If not, he could just make them an acting director or acting secretary like he did last time.
Yeah, he's got a mandate, so he can get away with basically just putting people in place and having them do their thing.
And I think how that works is that they'll essentially have 210 days as acting secretary with an option to extend it for another 210 days.
Which is a long time to get a lot of things done, because it'd be the first 6 months where all the major things happen. And then after that, it's cleaning up the messes of the major things. So yeah, that could very well happen. So we're going to we're going to follow in the footsteps of Argentina and El Salvador by trying a populist experiment here. And I'm cautiously optimistic about specific things getting done. Now, having said, let me flesh that out a little bit, because we are a country that is basically heading off a cliff in a lot of different ways. We're incredibly unhealthy because the big food companies and the big pharmaceutical companies have taken over the public health and the food sectors of our economy. So we're poisoning our kids. We've got straight up lines of diabetes and childhood allergies, and basically any other kind of chronic illness you can think of. We've got them going, so we really need to fix this in a hurry. And we're blundering into World War III, and we're taking on insane amounts of debt. We're a country that's very sick in lots of different ways. So this is important, what's happening now. If we can fix some of these things, then we're more resilient when it comes to the things that we can't really fix. And one of the big things we can't fix is the amount of debt that we've taken on over the past 30 or 40 years. We've got a financial crisis out there no matter what. Let the federal government or the Doge group now, Vivek's and Elon's new organization that's coming online to make the government more efficient. Let them cut $1 trillion a year out of government spending, which is impossible, but let's hypothetically say they do it. We're still running $1 trillion deficits, and we're still building up debt at an unsustainable pace. So we've got that financial crisis out there no matter what else happens, no matter how well things go. For the populist revolution that Trump is attempting here, he's still inherited a country that is so over indebted that there has to be a currency crisis and there has to be a currency reset. So these are basically, what we do with the FDA and what happens at the Fed and Treasury are basically separate things. One won't fix the other. And I think personally, I feel a lot better about what's happening because if we just have a big financial crisis to deal with, that's manageable. Financial crises have been happening since the beginning of nation states. And most countries, there's a lot of turmoil that flows from them. Sometimes you end up with a dictatorship like Hitler or
Mussolini
the
or
French guy.
Stalin.
Well, I'm thinking of Napoleon. Yeah,
Oh, yeah,
Napoleon.
okay.
Because France had a hyperinflation, then they got Napoleon, and then they had a generation of European wars. So, it doesn't always end well, but it's a thing that your country survives. And that's a thing that we can plan for with some hope of getting through it. Resilience we develop now helps us during a financial crisis. So we're back to something that is scary, but essentially optimistic because it's an inflation or an investment thesis. Unlike World War III or something like that. How do you plan for nuclear Armageddon? You can't really. Or
go long gold. That's pretty much the play.
well, yeah,
Foods.
you totally want to go long gold in that kind of a situation. But if a H-bomb lands nearby, your gold is not going to save you. But there are other things that can happen that are survivable and we should be investing for. And so, yeah, now we're kind of back to where we were 5 or 10 years ago when the big topic might be the coming financial crisis. It's still not an optimistic conversation, but it has an optimistic component because it's an investment thesis. You can say, all right, these horrible things are coming, but don't curl up in a ball and whimper. Get out there, buy some gold and silver, buy some really well-chosen real estate, look at oil stocks and look at other kinds of commodities investments and farmland and things like that. And, you might be ready when the time comes to not just survive, but actually thrive, actually do really well. And for me, actually, I've been on the whole gloom and doom side of this for a really long time, and I've been looking forward to the system resolving itself. In other words, us having the currency reset and then getting on with things where an investment guy can have, optimistic theses involving tech stocks or something like that, or biotechnology. And, it would be nice to get to that point. But it looks like it's going to be a little while. We're still going to have the financial crisis. We're still going to have to invest for that. And then at the very bottom of the process, when we're rebuilding from the rubble, then we can kind of broaden our investment horizon to, okay, what do we want to invest in? If things are basically going to be okay from now on, we'll have sound money and we're going to grow organically at a steady pace. And, the politics will mostly be stable because the financial system is stable. What should we invest in then? Actually, tried to sell a book with that idea. It was called After the Crash. And the thesis was, well, okay, a big financial crisis is coming, but what do you want to get up to speed on now so that you're ready when the system does collapse and you can start buying things with an optimistic bent again? No publisher wanted to touch that because it's basically two stories, financial crash coming, and then what kind of tech stocks are interesting afterwards. And they didn't know how they could sell that. And they were kind of freaked by the financial crisis is coming aspect of it anyhow. But I think that still is a valid way of looking at things now. Maybe we get through the whole geopolitical chaos thing and get to have our financial crisis. And maybe we can make a lot of money during the financial crisis. And then maybe we're ready for some kind of an optimistic investment thesis after that. So the short answer to your original question after I ran on like this is that, yeah, there are still bad things coming, but not nearly as bad as could have come if we just are wise for the next, let's say, 3 or 4 months and don't do anything that's irrevocable. Then we've got a manageable situation out there. So I'm actually, half pessimistic and half optimistic now for the first time in quite a while, because I've mostly been just optimistic about or pessimistic about where we were headed as a country. So I guess that's progress, some progress.
Your pessimism is bottomed, essentially.
Yeah, well, I'm not worried about the worst things anymore. But that's premature. We still have several months of Ukraine being able to shoot long-term missiles at Russia. But assuming everybody just chills right now on the geopolitical front, then we've got an understandable situation to deal with. And I like that a lot more than nuclear Armageddon. That's just not understandable in any fundamental way. What's coming if we avoid World War III is something that can be planned for, so we can go back to talking mostly about investments and less about political chaos.
Did you see that piece on Liz Truss the other week where she was essentially just talking about how she was prime minister for what for
like 3 days,
like 15 minutes. She was there for a cup of coffee and she was out. But despite all that, she spent most of her time, she said, just reviewing wind patterns, British wind patterns upstream of Ukraine, because they were actually pretty concerned about a nuclear weapon being used in the early days of the Ukraine war. This is back in late 2022. So the public was unaware of this. We didn't know anything about it, but the politicians did, and they were actually making preparations for it because at that time it was getting pretty spicy.
Well, see, that's where we get into the kind of Doctor Strange-Lovian situations where, okay, NATO, which is to say Europe and the US, basically funds this proxy war that could very easily go nuclear because it's a proxy war against one of the world's nuclear powers. And so you get the leaders over in Europe doing what Liz Truss was doing, just calmly sitting there looking at wind patterns because they might have caused a nuclear war to break out. It's baffling that could be the thought process, but it seems to be how it works for those guys over there. They're very calmly doing things that might lead to the annihilation of their civilization.
Yeah, and the key thing is that the public was unaware of this. I mean, 2022, no one knew that. Well, some of us knew. Some of us knew the dangers of what was happening, but like the average person was blissfully unaware. But I just thought that was an interesting thing to chime in on. As it relates to your financial crisis comment and the opportunities that might come across there, number one, could you define what this crisis might look like? Is it a stock market crisis? Is it a real estate crisis, credit crisis, debt crisis? What exactly is this is this financial crisis? And number two, what are some of the opportunities that could be had in the midst of this crisis?
Okay, what's coming is probably all the things you named. It's the bursting of the everything bubble.
Okay.
Since we started the fiat currency experiment in 1971, which basically gave unlimited credit cards to the world's governments, we've been taking on more and more debt. The amplitude of the boom and bust cycle has gotten bigger and bigger until we reach the current point where we've got a whole bunch of bubbles out there all at once, not just tech stocks, not just junk bonds, not just subprime housing, but a lot of bubbles. And they're all going to burst. And the resulting bust is going to be more than most governments can handle because they're going to step in. Let's say the US has a commercial real estate bust that morphs into a local and regional bank crisis. Okay, that's one subset of things that could go wrong. Federal government steps in to bail everybody out with another $2 or $3 or $4 trillion. The world, or at least Americans, who have already experienced high inflation in very recent living memory, don't take that well at all. And they start front running the government. The dollar starts to crash. You get kind of the Austrian School of Economics crack up boom, which is a time when people just lose faith in the currency. And they buy real stuff with that currency immediately. That causes inflation in the real stuff sector. And the currency just kind of collapses. So, stripping out all the other stuff that would be happening at the same time, that's kind of what would happen for us here. And so we end up with a currency that's not really working anymore in the sense that its value is falling dramatically and people don't want to use it anymore. Or they want to use it to buy real stuff, which then goes through the roof. And then, once the currency has kind of been given up on, the government has to do something like, look around in Latin America and see what they do. They lop a few zeros off the currency and then reintroduce it or something like that. We will have that kind of a currency reset, which Jim Rickards has been talking about for quite a while. His books are really good guides to the details of something like this. And then the question is, what is the next, dollar system out there or across the world? What's the next kind of global monetary system after the fiat currency system fails? And I think there's a decent chance that there's some kind of a gold standard. So, okay, within that crisis, there's an investment thesis. You want to front run the tsunami of capital that's going to flow into real stuff. So own commodities mostly, because if the economy doesn't collapse. Oh, by the way, this will also bring with it an equities bear market, at least at first. Because a banking crisis would knock stocks down, and then the government would step in and bail out the banks, but also the equity markets as this goes on. So, we might have the spectacle of the dollar collapsing while the NASDAQ goes up, okay, but it probably won't go up as much as the dollar goes down. So you still lose in real terms. So anyhow, the government then finds that it's got a list of options, and all those options are horrendous. You got a French Revolution, you got a Weimar Germany style hyperinflation, you've got a 1930s style depression, and you've got a currency reset in which you go back to, say, the gold standard and give up the power to create money out of thin air. So no government wants to give up the power to create money out of thin air if it doesn't have to. But looking at its other options, maybe, a gold standard is the worst option or the best option on a very bad list. And so that's what they choose. No guarantee that happens because it's theoretically possible that they decide to take this thing all the way to the end where, or we're Weimar Germany 2.0 or we have another Great Depression. But hopefully at some point, just resetting the currency is going to seem like the thing that stops the bleeding. And they do that. So, that would take the form of some Sunday night announcement where the government just says, from now on, the dollar is a name for 1/10,000th of an ounce of gold. And that's it, and that would brutalize the people who trusted the government and kept big bank accounts denominated in dollars and government bond funds in their IRAs and things like that, because those financial assets would go down in value along with the dollar. But it would enrich the gold bugs, the people who own real money like gold and silver, which would go way up in a currency devaluation. So that's the question, what group do we want to be in, and how soon do we want to get to the good group, and one of the good things about it taking so much longer than it seemed like it should have, for the fiat currency system to break down, is that it gave people a lot of time to be stackers and allowed a lot of strong voices to emerge online and elsewhere, explaining what's happening and talking about what to do about it. So, your show got to happen because this thing took 15 years longer than it should have.
Yeah.
And now you're able to help people out there by teaching them how they should approach what's coming. And so there are a lot of people out there that have been stacking for 15 or 20 years. And they, have been doing it a little bit at a time, dollar cost averaging silver coins or whatever. And now they're in a place where if tomorrow we had a crack up boom and a currency reset, they would be among the people with serious capital going forward. They get to bail out their friends and families and protect themselves. And I think that's one of the very good things about the fact that this has taken so long, because a lot of people have made the right decision and implemented it now, and they are going to be basically okay.
Interesting. What about crypto in this equation? Trump's admin seems to be, or campaign or admin, whatever you want to call it so far, they seem to be very heavy on crypto as well. Do you see crypto playing a role in this currency reset?
Very possibly. Trump is such an opportunistic guy that it's hard to know if something he said during a campaign is going to translate into serious long-term public policy. So we don't know for sure about what the whole crypto thing is, because, cryptos, if they succeed, or at least Bitcoin, if it succeeds, becomes a threat to the big fiat currencies. And it's not clear how governments are going to respond to that, because if we went to a crypto standard, that basically means we're throwing the dollar out the window and replacing it with Bitcoin. And a lot of people who derive power from the dollar being the world's reserve currency and the legal tender in the U.S. aren't going to like that. So it won't be something that's a smooth trip from here to there. But at the same time, there are a lot of instances of Bitcoin becoming accepted kind of organically out there. The government of El Salvador names it legal tender, or a given company starts accepting Bitcoin in payment along with dollars. And if things like that kind of happen piecemeal out there, then eventually you get a critical mass of the economy that will accept Bitcoin, and it becomes part of the equation. But then you get to the physical versus virtual debate. Like, for instance, let's say you and I are we're in Phoenix or someplace, and the shit has hit the fan, and we need to get out of town, and both of us show up at a used car dealer at the same time. And he's got one car left, and I pull out a handful of Krugerrands, and you offer him the key to a Bitcoin account that and I'm sorry, the internet is down in this scenario. Okay, we've had a blackout or whatever, an EMP attack, or whatever, but we just can't get to anything online. So I offer him gold for that used car. You offer him a much larger amount of Bitcoin if he trusts you. And what's he going to do? And more than likely, he'll take the gold, right? Because you can't guarantee and you can't prove that you've got this Bitcoin. And so that's kind of an illustration of the debate between physical and virtual assets, that there are times when physical is necessary. And there are times when virtual, let's say you and I are trying to get to Switzerland from the US, and I'm gonna fly with a handful of, or a pocket full of Krugerrands, and you're gonna have a little thumb drive with much more Bitcoin there. You could just send that Bitcoin to Switzerland instantly with a mouse click, and then you don't have to worry about border guards or anything like that. And I do if I've got gold. So it's going to be an interesting debate over which form of money is superior and under what circumstances. And I think Bitcoin is part of that debate. And I don't have the technical chops to really weigh in and say, well, Bitcoin is superior because this, and this. And I feel like I can say that about gold. Gold is historically the world's money. Central banks are just buying the hell out of it right now. And in which is evidence that they're preparing for the potential of a gold standard going forward. And so I can say that with certainty because it's understandable and it's happening. But I can't make the Bitcoin case as thoroughly because I'm not technically as sophisticated when it comes to cryptos. But somebody like Mark Jeftovic, you could have him come on, and he could give you the Bitcoin side of the story about why Bitcoin is going to be the monetary base layer of the global economy going forward. And it would be a really interesting talk, but I can't do that, And I think there's always going to be a place for physical money, which is why I'm very comfortable saying, yeah, own a lot of gold and silver coins and bars, and diversify where you put them all, but make sure they're physical. I think that's good advice, because I think physical money will never go out of style because there's always a place for physical assets. And so the stackers right now, maybe they want to have some Bitcoin as well, and I wouldn't argue with that. But I definitely think gold and silver should be, at or near the core of your financial life going forward in this kind of a world.
Interesting. Could it be possible that Bitcoin is just there to siphon off capital from that would have otherwise went into the gold market? I mean, if you're like a sovereign country or like an intelligence agency and you want to prop up or you want to diminish the gold market, I mean, doesn't Bitcoin fit that bill? Because you look at all these central banks, they're not buying Bitcoin. To your point, they're buying gold.
Yeah. Somebody else, if you haven't already interviewed Catherine Austin Fitts, that's somebody you ought to talk to because her take on cryptos is that they're basically an on-ramp for central bank digital currencies. In other words, get us used to digital assets like this, and then convert Bitcoin into FedCoin or something like that. And we're primed for that to happen because we already understand the concept of a digital currency. And this, we changed the name, but we still understand the concept. I'm not technically competent to say that that is a hard yes or a hard no, but if you ask me whether I think the government is corrupt and sneaky enough to have that as part of their plan, sure, they would totally do that if they thought they could get away with it. And they might have people who believe that they can get away with it. So it could be that Bitcoin is the loss leader, or the marijuana in this process that leads to CBDC heroin or something like that. I don't know.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys.
Which doesn't mean never own Bitcoin. It just means have some physical assets too. And very seldom in the financial world do you want to not follow the big central banks because they tend to be they do things with so much money. Like they basically have unlimited printing presses electronically.
And they can move it. I mean, they can
Yeah.
move the price. I mean, you're
Yeah.
just there for the ride. It's like those scenes where like you just see like a guy in a skateboard just like hang on to like the back of a truck and he just he just gliding on down the road with the truck. It's the truck
Yeah.
doing all the work.
Yeah, yeah. They're or another term is whales. There are whales in this market that didn't used to be there, and it's the central banks. So the gold and silver market has a lot of new capital flowing in, and a lot of it's coming from central banks that just make it up out of thin air. So they have unlimited amounts of cash to throw at precious metals as they want to, if they want to, and that's partly why gold is up so much in the last couple of years. Because central banks have been buying 1,000 tons a year for the last 2 years, and they're not really done, it doesn't look like. So, and now they're stepping into the silver market. Russia just announced that they added silver to their precious metals strategic reserve. And if a major government wants to start adding lots of silver, meaningful amounts of silver to its reserves, silver is a tiny little market, and it's so thinly traded that an entity like Russia could make a huge difference in the amount of silver that's being taken off the market and what that does to the price and how close it brings us to panic buying in the silver market, because silver is already in deficit. In other words, we're using up more silver for solar panels and military tech and lots of other things than the world's mines are producing.
What's stopping like a few billionaires from just like getting together and just like buying a crap ton of silver and jacking up the price?
Nothing. Well, the specter of the Hunt brothers, who I think went to jail for trying to do something like that back in the 1970s, but nothing financial is stopping them. So let's say Elon Musk decided he wanted to buy $10 billion worth of silver. He could do that with a mouse click, and that would move the market, you know. And let's say, well, India is already buying much more than that of new silver each year because they want to build up a solar industry, solar panel industry, and you need a lot of silver for that. So, or let's say the auto industry decides that it's going electric and it needs a certain amount of silver for its electric cars, and it doesn't want to be left without that silver, so it's stockpiling. Well, something as big as the auto industry could totally move the price of silver if they decide, you know, they want 1,000 tons of silver, and they'll pay whatever they have to pay to get it because that's the board has decided that that's the target for the amount of silver they need in their reserves. Then huge difference, you know. And silver has gapped up in the past. In the late 1970s, silver went from a few tens of dollars to $50 in basically no time flat. Silver in the 2000s went from a few bucks an ounce to $50 an ounce again. You know, it has happened in the past when hot money starts flowing into that sector. So I think it could easily happen this time around, with the big difference being that the industrial demand is huge right now. It's much bigger than it ever used to be. And solar panels aren't going to go anywhere. The next generation of solar panels use more silver than the previous generation do. Military tech, silver does things in missiles that really nothing else can do. So I don't think the demand for silver has ever has kind of a downward spike in the near future. It doesn't just drop dramatically for no apparent reason because some industry changed its tech. I think it's kind of baked in the cake that industrial demand will be pretty strong for a while, and then let investment demand go way up because people panic about the currency and they decide they want silver instead of gold because silver is relatively cheap, and that might be the thing that does it. So we could easily see silver start behaving like Bitcoin in the not too distant future.
What do you make of the price action after the election when it comes to precious metals? I mean, they did take a bit of a correction. Was this mainly just a technical correction, or was there some narrative involved that a Trump presidency would be bearish for precious metals?
Well, I think that if you just look at the gold chart, for instance, it was due for a correction because it had such a nice run. But I think going into the election, there was people who understood what was happening were worried about the end of the United States as we know it. 4 more years of the policies of the last 4 years would have another 10 million people come across the border, with half of them being military age men who are completely unvetted, and another 2 or 3 proxy wars out there, any one of which could turn into a shooting war with a major nuclear power, and kind of a quasi dictatorship where the government felt free to censor previously protected speech. We were turning into a country that we wouldn't even recognize anymore. And I think buying gold was one of the responses to that. I think people were just spooked by what was happening. And that added to the demand for gold, which added to the price action for gold. But the way the election worked out was a landslide in favor of people who were promising to fix a lot of that stuff that was spooking people. So there was probably relief selling on the part of a lot of people who were like, oh, okay, well, we don't have to worry about this, and this as much as we used to. So we don't need as much gold as we used to need. And now what's happening, as we're speaking today, gold and silver are both up pretty nicely. And I think that's because people have looked at the world and they thought, okay, maybe we don't have to deal with a nuclear war after all, or a dictatorship, but that financial crisis is still out there, and we do need to own lots of gold and silver because we're still going to have inflation followed by financial turmoil, followed by some kind of currency reset. Those things are still out there waiting to happen because Trump is an easy money guy. So not only isn't he promising that we're going to jack up interest rates and go back to a strong dollar policy, he's promising the opposite. So that could account for today's action in precious metals, where people are like, okay, we don't have to worry about this, but we still have to worry about that. And we need gold and silver to protect us. So, which is, as I said really long-windedly before, that's kind of my take, is that, okay, the other stuff might get fixed, but $35 trillion of debt going up by $1 or $2 trillion a year, and interest cost on that debt of $1.6 trillion heading for $2 trillion, that's unfixable. And so we should be investing accordingly if we've got this big unfixable thing waiting to happen out there.
How do we discern the imminency of this crisis? Because I mean, we've been hearing calls for a crisis for decades now, and rightfully so, right? But how do you know when it's finally enough? How do you know when the debt market's tapped out, the credit market's tapped out? When does that day actually come?
Well, I actually thought that 2007, 2008, 2009 was the end of the road, So I don't really have credibility with short-term timing questions. So, but I will say that one of the things that we should look for, and which is already happening, is when governments have accumulated enough debt that their interest costs start to spike, if interest rates even go up a little bit. And the US and parts of Europe and Japan are all in danger of national bankruptcy with the way interest rates are spiking. And what that means is that we've lost a tool for controlling inflation. We can never again raise interest rates in order to stop inflation from accelerating. Yeah. And so we're kind of at, you could call that a kind of a financial death spiral, where we're at the point where interest is just spiking, which that interest is borrowed, which means debt is then spiking, which spikes interest even more. Inflation necessarily flows from that, but the Fed can no longer raise interest rates to stop that inflation. And so once people figure that out, it kind of looks like we're setting the stage for, if not runaway inflation, at least accelerating inflation from here that can't be stopped. And I think that would be the end for the fiat currencies if we hit that point, because everybody would realize there's no fix for this, So we need to start managing our money as if there's no fix. In other words, not looking at, okay, how will the government save us from this, when, we realize the government cannot save us. So I think it's a decent chance that, in other words, that we're there, that we are right at the end of the fiat currency experiment, and that we should start behaving accordingly.
I see. Well, John, I've thoroughly enjoyed this interview. Anything else you want to talk about before we wrap things up?
Well, no, Danny, because what I always want to say at the end of a talk like this is that, okay, it's an investment thesis. That makes you think of it that way, and it'll help you be a little bit more optimistic about the future. But I already covered kind of that. So I think we covered everything important this time.
Excellent. Well, drop us where people can find you.
I'm at rubino.substack.com, and I run a newsletter there that is kind of full spectrum prepping with an emphasis on commodities investing. In other words, which commodities, like, is uranium the thing we should focus on, or should it be gold and silver across the board? And, so far so good. Commodities are doing well in general. And so the basic investment thesis is working out. And then the life coaching side of prepping is kind of evergreen. All of that stuff is the way we should be living in any event. So it's good. If we haven't started to live that way, we should begin now.
What commodities do look most attractive to you right now?
Well, the silver story, as we talked about, is pretty great. Copper, if we're going to electrify the world, and because of AI, it looks like we're going to, building these artificial intelligence data centers, and they require silver in the chips, and then silver for some of the transport that's involved. And that's the same thing for copper. You need huge amounts of copper for the electrification that it looks like we're going to attempt. And there's not nearly enough copper coming out of today's mines. So basically, the price of copper has to go way up to incent miners to go get copper to allow us to do the things we want to do. Uranium might be the best story of all, because it's kind of immune to the business cycle. Basically, over the last 10 or 15 years, most countries either scaled back their nuclear power sectors or just killed them off altogether, like Germany did. And now it's turning out that the things they replaced nuclear with, which is coal in a lot of cases, and also solar and also wind. Coal is obviously dirty in the terms that a lot of people use to judge energy sources. And solar and wind, solar is good. Wind is just forget about it, bad. But they're intermittent. They don't work continuously unless you set up really expensive batteries along with, say, a solar farm. So they're not an across-the-board solution to all the energy we need going forward. And it looks like nuclear is the new shiny thing in the energy transition, where everybody's going, oh yeah, we shouldn't have shut down those nuclear plants. Let's pull them out of mothball and set them up again. And or if you're like China, let's build 50 new nuclear plants in the next 20 years. And that requires lots of uranium, which is not being produced by today's mines. So it has to be gotten from somewhere. So we got to incent new mines to go online. And to do that, we have to make existing miners very rich, right? So today's uranium miners, and they've already had a really nice run, but I think the trend has legs because this is a long-term thing, and if you greenlit a nuclear plant and there's a recession, you don't just go shut down the half-built nuclear plant. You go ahead and build the thing, right? So if we have a recession, which we probably should in the next year or so, that won't really slow down nuclear as dramatically as it might slow down, say, oil or gas or something like that. So I think the uranium miners and maybe some of the utilities that are big on nuclear right now, and maybe, if you like growth stocks, some of the emerging makers of small modular reactors. I think all of them are really interesting in that space. And on my Substack newsletter, the uranium stocks are up, and they're way up again today. But I think they're still worth dollar cost averaging into. In other words, don't just jump with both feet into something that's doubled in the last year, but do add a little bit each month, or put in some lowball bids where you put in a bid for 20 or 30% lower than today for one of these stocks, and when they correct, as they always do in bull markets, then you get some shares cheaply, So there are ways to play something that has had a nice run and maybe isn't the perfect buy right now, but that has a long-term prognosis that's really good. So I think that's how you approach nuclear.
Excellent. Well, John, thank you again for coming on. We'll have the link to your Substack in the description box down below, so be sure to check it out, guys. Also, if you got value out of this video and if you agreed with what we had to say, type "Go John Go" in the comments. If you disagreed with anything, however, let me know what you disagreed on. I do read the comments, guys, so drop me a comment. Let me know what you thought of the interview. Let me know if there's any points of contention or if you disagree with anything. I do read the comments. And then finally, check out our Substack, capitalcosm.substack.com. Link to that is also down below, where you can find ad-free and early access to all of my videos, as well as the chance to recommend me guests and propose questions for future guests down the line. And so with all that said, I'll catch you in the next episode. Bye, y'all.